Hi, I'm Ashikur Rahman. Welcome back to my channel where I upload accounting tutorials weekly. Today in this lesson, I'm going to show you how to calculate current ratio. Let's get started. Okay, so have a look at the question on the screen. Anna has obtained the following data at 31st December 2016 in respect of Robbie, a possible new customer. Okay, so there are some informations given, and from this information we have to calculate this current ratio. Okay, what are the information here? Trade receivables, cash and cash equivalents, inventory, trade payables, sales for the year, inventory, and markup. Okay, so here these all items are not relevant to calculate this ratio. So relevance item will take from there and we will get the answer of this ratio. Okay, so what is the formula to calculate the current ratio? So we know current assets divided by current liability equal to current ratio. Yeah, so what is our current asset here? So first of all we need to get it. Yeah, so let us write here current assets equal to so look at the question once again. We have here trade receivable, which is a current asset, cash and cash equivalent, current asset, and inventory. So these three current assets given in the question. Okay, so let us write here one by one. Trade receivables plus cash and cash equivalent, whatever you say, plus inventory. Okay, look at the question once again. There are two inventories. One is here on 31st December 2016, which is $38,100, and another one in the last of the question, inventory at 1st January 2016, which is $46,200. So that is an opening inventory. So we are not going to take that. We will take the closing inventory. Okay. So many people make mistake here. Instead of writing closing inventory, they write here opening inventory. Okay, so let us identify here. We can write here 31st December. Okay, that means it is a closing inventory. Yeah, as year started on 1st January. Okay, so what is the price here? Trade receivable is $20,640. Okay, cash is here $4,840. Okay, then inventory is here $38,100. Okay, now what to do? We have to add this all three items. So what is our total current assets? So if we calculate, we get $63,580. So we got our total current assets. So what is our current liability here? Current liabilities. So have a look at the question. Here we have only one current liability, which is trade payable. Yeah, so let us write here trade payable. Okay, the price is here $28,760. Okay, so we got our current asset and current liabilities. So there are some other current liabilities like bank overdraft, other payables. Okay, fine. So now let us write the formula. So we know current ratio equal to current assets divided by current liabilities. Yeah, okay, so here we have our current asset. It is $63,580. So we have only one current liability, which is trade payable, and amount is $28,760. Okay, so now we have to divide this 63,580 by 28,760. So what we get if we divide? We get here 2.0 2 1 2 1. Okay, so this is how you have to calculate current ratio. So very simple. If you know your current assets, if you know your current liabilities. Okay, so this is a quick lesson. I hope you understood and enjoyed this lesson, and please consider subscribing to my channel because there are so many other videos which will help you to learn accounting, to understand accounting. And next time I'll show you some more ratios like this so you can prepare yourself. Okay, so that is all. I'll see you soon with new video. Until then, bye bye and take care.